Welcome to the Real Money Show, everybody. My name is Jeremy Wiseman. I'm joined by Jerry Correia. The phone number, 1-877-8-SILVER, and the website, guildhallwealth.com. Kind of a historic day in the market. We were surpassing $50 silver sustained. We actually even got up as high as $51 as we're recording the show here on a Thursday afternoon. It has since come down, but the machinations of the market are really the story here.
Yeah.
I don't even know where to start. Let's start with what's going on in London.
What is happening in London? Yeah, definitely the past 36 to 48 hours have been just extraordinary. You know, looking at silver, which is up over 70%, there's a lot of machinations, as you talked about. Gold's up 45% on the year to date. Gold crossed 4,000 an ounce in the last 36 to 48 hours. That's huge, showing good support at above that mark now. And now silver has moved beyond $51. We're seeing a lot of volatility this morning. Why? When we came in this morning recording on the Thursday, again, this was just coming in after the Chinese holiday. So China was off for the entire week. All that volume was off the table. Note, 2 weeks ago, China reported that the spot price in China was 42 an ounce when we were at 47.50, Jeremy. When we hit that smash down low, that little dip. Any dip that you're seeing right now, silver is buoyant. Silver is being bought up. And you're winning if you have the physical, because right now what we're seeing in the world global markets is a war between the futures market and the spot market. This is backwardation time. Usually the futures price, which is the price to deliver silver in the future, in sometime future with 60 days, 90-day period, whatever, 120 days, it's usually higher, Jeremy. But right now it's backwards. Spot price is much higher, and the spread between the two. It's over $2 now.
Well, what used to happen is that would be an indication that the market should be taking off. But we're seeing backwardation happen after a 70% move in silver.
Mm-hmm. So the silver is in backwardation officially, where spot prices are above the futures price. This is due to the physical shortage happening outside the U.S. Retail is still selling here in North America due to desperate times. We're seeing how many businesses closing in the last 3 months, Jeremy. Stores that you and I, love to go to. We're seeing life-changing things happening here in Canada. Hudson's Bay, of all companies, closed down. Big things are, happening. And the markets are just, I think we're coming into a clearing, light into the darkness moment. We know that the papers market has been the problem over the past, how many years? There's been a war on silver for how long?
Basically since 1973, 74.
65 even, when they removed the silver out of the coinage. In the precious metals world, gold and silver futures contracts trade in the COMEX. They're called paper markets because they represent a promise to deliver sometime in the future. It's an IOU, not the physical bullion itself. Most of these contracts are never settled in physical. So they create all these contracts. That means for every single ounce of physical or silver or gold held in the vaults, there can be hundreds of paper claims against it. This is a classic way of creating artificial supply to keep something down, something that is very important and something, Jeremy, that is critical.
Well, now it's on its way. It's not official as a critical mineral, but the U.S. Department of the Interior wants to say it is. In the past, we've always had to be worried about the naked shorting, meaning there was no actual physical backing up the short positions in the market. Do we have any updates on that, where that big naked short position is, or is it or does it suffice to say that they're obviously in trouble with the type of moves we've seen in the silver market and the lack of physical product that's actually out there?
The lack thereof, and the cost to lease and cost to borrow. The SLV, the largest ETF, just saw a new high for the recent move in the borrowing fee to short shares of the SLV ETF. It's the highest percentage to borrow that we've ever seen. And there is literally no shares available to borrow. Again, that was an instrument a piece of paper that was used to artificially keep the price down. But the world wants a release. China, the BRICS, the Brazil, Russia, India, China, with their vault systems being set up, blockchaining gold. They're creating a system that is putting pressure on the old guard, on the London markets. They're all empty. Spot prices closed down in London for 15 minutes. It was a 15-minute silent of unobtanium for silver.
If that just blew your mind, that in London, they stopped the market. The circuit breaker just went off for 15 minutes and all trading stopped. If that blew your mind, you need to call 1-877-8-SILVER and go to the website guildhallwealth.com, because you just got one of the biggest indicators of silver going unobtanium. Unobtanium. For 15 minutes, you could not trade in the market, and we know that the physical is being just decimated out of the London area. And we're also seeing this week retail really picking up. The number 1-877-8-SILVER, the website guildhallwealth.com. Jerry, just before we move on, and this unobtanium is a huge deal. The fact that the lease rates on ETFs would go through the roof like this, what do you think? We're speculating here, but what do you think? Do you think it's because any product that could be borrowed to go short has already been used, or that the investor has wisened up to turn off margin and say, no, you can't use my shares?
Yeah, this was just, I think, London had to kill the switch, and people and investors alike can do the same thing and turn off the banker's ability to utilize this silver that is supposed to be backed by physical as collateral, and to use that no more. You're not going to be able to create artificial shares, create artificial ounces in the market, because adding any type of supply to any market, it's supply and demand economics 101. More supply, prices drop, and that's what we're seeing in this backwardation moment. I think this is a major flush out. As Monaco 64 in UK reported, IG.com stopped quoting spot silver for 15 minutes. It's said that the London bullion banks stopped quoting. It is now back on. It's off and on. Cracks are starting to show, says Monaco. And Peter Schiff, in response, the silver shorts are mounting one last stand. Silver is back down in and around $50. But if this level holds as support, the battle is lost. In the meantime, nervous mining stock investors are selling too. They'll be paying up to buy these. And this is exactly what we're seeing. A lot of things that are levered to bullion, like some shares, the ETFs, the JNUG, the Nugget, everything's down a little bit more than the physical. But again, the rush is on for physical, right? It's a rush to get your hands on something. As we say, and as we believe in, and we've been saying for time and time again, if you cannot hold it, you simply do not own it. You want to own it entirely outside of the banking system. That's why countries, just like countries, more investors and Canadians have turned to us and turned from financials, turning to allocated physical ownership, holding real physical bullion, Royal Canadian Mint, PAM Swiss, outside the banking system as a hedge against the paper system's leverage, but the fragility that it provides, 400 to 1, that's a derivative. And derivatives will bring down the financial system as we know it. But position in physical bullion, because this is a stock out, Jeremy. As Daniel Galley said from TD Securities, the director of commodities, a silver stock out, which is rocket fuel for higher prices.
Yeah, I do think that there's a lot of opportunity in the markets. But at the same time, let's look at one of the biggest reasons why people want to be owning physical precious metals is because of inflation. And we have said for years, and we don't want to be right about it, but we are, that the money's been printed. It's in the mail. How are you going to pay back these debts? You're going to pay it back with dollars that are worth less. And every year, governments have been borrowing and spending, making your dollar worth less. And we're getting to a point where for the last almost 10 years, since 2009, well, I guess it's been more than 10 years. My math is totally off today.
Okay.
Woo.
Drink some of that coffee.
But, basically, if improper quantitative easing in 2010 or 2009, and then you had during the pandemic, hundreds of billions of dollars being printed, debt to GDP is off the charts. The global debt in the world is probably approaching 350 trillion plus. And that's not included unfunded liabilities, right? And the leverage on that debt, et cetera. And so that it's going to be paid back with inflation. And if we haven't dealt with enough, we're going to have to continue to deal with that inflation. Mm-hmm. Not because we don't think the governments are going to just stop spending money, but because it's already been done. In the U.S., they're paying $1 trillion a year to service the debt. That's an ongoing issue that they're going to have to keep dealing with. And where do you turn? And so you look at gold and silver, and they are incredible hedges against inflation. And inflation is nothing more than theft. It's theft. They steal 40% of your income through income tax. They steal another 13% on everything you buy after that. Then there's all the hidden taxes, right? All of those things. And then they put inflation and they say, well, it's 2%. When when you go to buy food, it's way more than that. You go to get your insurance, it's more than that. You go to pay for anything, it's more than that. And when they can't show it to you physically, they take it away in other ways. You go to a restaurant, sorry, no more bread, right? You want to go buy potato chips, it's microchips.
What about the 5-inch sub they brought in? You're not getting a 6-inch, a half. You're getting a 5-inch.
So, there's exactly shrinkflation. And so how do you protect against that? And you shouldn't have to take away your lifestyle as you get older.
Right.
You should be maintaining it. And gold and silver not only have done that, but they will continue to do it. So give us a call, 1-877-8-SILVER, the website, guildhallwealth.com. Remember, if you can't hold it, you don't own it. And with Guildhall, in a registered account, you have the ability to go and personally audit your holdings. I've got clients all the time who are taking in-kind delivery through their RIF accounts, whether they're just giving it to their kids or they're not ready to let go of it. They're taking in-kind delivery, being put into their TFSAs, being put into their depository accounts, their vault, their personal private vault.
It's yours.
It's yours. And so we help clients to do that. We'll show you how. And same thing with the retail. Let's talk about retail in a minute, just buying it direct and taking it home. The number, 1-877-8-SILVER. The website, guildhallwealth.com. We're talking about all manner of things that are happening in the gold and silver market. And it really is just a juggernaut of stuff going on all at once. And I get lost on what we're talking. Okay. I want to just quickly discuss it. We've been monitoring the gold and silver leaving London. Today in London, they stopped trading. Silver became Unobtanium. Is the silver gone at this point, Jerry? Are they completely out? Have they already had their stock out?
I think so. I think with the news of it, being broken weeks ago from, Daniel Galley recommending, that silver to gold ratio will potentially drop by 10% going into the 70s. Even with the run up to 51, we were still above 80 to 1. Silver has a lot of move on the top side, but because of the rush, when you call something a critical mineral or designated something, it's going to continue to get bought. So I wouldn't be surprised, and we're still waiting on confirmation, myself personally, on the London being totally out of the LBMA, but it's shifting money, and I think we're going to have a new price discovery. The power, the hegemony that London once had is suddenly being removed.
So let's just talk about the current spot we're in with prices being having made the moves they've made. We often talk at the office where, look, people will say, where do you think it's going? Right? Where are we going? Is the top in, et cetera, et cetera. So I want to get into that discussion, and as a lead into that discussion, I want to have a little chuckle at the expense of some banks that have to keep revising their projections higher and higher. I'm sure you've noticed this, Jerry. I don't have any specific offhand. I'm sure you could maybe grab some while we're talking. But it seems that these banks are saying, well, okay, now that we've reached $4,000 an ounce, or we're at $39.50 or $39.95, let's revise to $4,500 for next year, right? Silver, we're already there. They seem to not, it's getting to a place where their projections are almost behind where the price is. Like we're in projection backwardation.
Yeah, I saw a projection actually below the spot price as we.
I made myself laugh.
I love it.
That was a silver joke. Projection backwardation.
But I saw one. I think it was credits. Don't quote me on that, but I'm going to research it. It was a projection that was actually lower than where we were currently yesterday. Right. So you're still behind, guys. You're going to still have to forecast higher, but we're seeing a lot of support. Many banks are revising and changing the methodology and the way that they're diversifying portfolios. If you look at what's going on in the world, you have everything hitting all-time highs. You have stocks, you have houses once at one point hitting all-time highs. Asset prices around the world are heading higher. This is an indication that your currency underlying is dying. We've got to watch out for inflation. This is why inflation expectations coming from Zero Hedge this morning, the inflation expectations leave stocks even more overvalued. Right? You have to really realize the value underlying your stock. You cannot, with my clients, our clients, who want to take RIF withdrawals when they're over 71 and they have other streams of income. They don't really need their RIF accounts, their registered income fund for income. They want the physical gold as is. You can take that. But at a traditional bank, you're not allowed to take out your stock or your mutual fund. They force you to sell into a worth less currency.
And not just that, but what's been really nice to see, and it's not been in gold, it has definitely happened. But what's been really nice to see is in RIF accounts, you withdraw, basically 5, 6, 7% a year, right? But if you're holding more than 40, 50% in precious metals, which Goldman Sachs isn't quite yet recommending, but they keep moving that up too, it's been great to see where, client takes out 5%, their holdings go down by 5%. But the market just went up 30, 40%.
Right.
So actually we have seen this. Nick's in the room with us. We have seen this with some clients who've been taking out over the last 10 years. Yep. Their accounts have been maintaining or growing, even though they've been getting out of the market. So that's a great place to be. You want to get to a place where you're just like living off dividends or whatnot, which is great. But in a market that's up 70%,
right,
and you've only had to take out 5%, this is a great thing. But I wanted to just, before we, we're talking about, is it too high? Is it over? Where's it going from here, et cetera? I think we should stay on that conversation because we often will say, okay, here's a starting point. Are we undervalued, overvalue, or fair value? Now, the critics or people who want to try to, poo-poo the market will say, well, it's overbought. Okay, but is it undervalued, fair value, or overvalue? Those things don't have anything to do with whether it's overbought or not. Now, the stock market, you could definitely create an argument that says it's overvalued. Mm-hmm. Look at the PE ratios. It's overvalued in many cases. Mm-hmm. Not all cases, but you can see that. And then when you look at gold and silver, you mentioned just before, we should jump into that. Banks are using new methodologies. We have the supply demand. There's no product available. And we've said that. My clients know this is strawberries at the farmer's market. Mm-hmm. There's enough for one or two to buy a little carton. If everyone decides that they want strawberries that day, that stall is wiped out. They're all gone. There is not enough to supply everybody all at once.
Correct.
And the market isn't even at 20%. We're not talking about a market, a public that has really got into it. I'll give you an example. You know, a lot of people want to, sorry if I'm going off here, Jerry.
No.
A lot of people are buying at big box stores that are selling gold. They get sold out very, very quick.
Very fast.
And I don't know if they're thinking about, well, maybe I should look up where else I can buy it, you know, and you've said all along, look, if you want to buy 10 ounces of gold, good luck buying it at a big box store, right? And banks will probably make you wait. You know what I mean?
Yeah.
So you got to go somewhere where there's actual supply. And I know for a fact that retailers, in the retail market, it's become feast or famine. For 2 years, the retail was buying everything back, and I don't think they necessarily all had the money to be buying back. They were raising their premiums to sell back, right? And now they're desperate to buy from the public again. It's literally gone from feast to famine in terms of liquidity. They had all this product, no one could sell it, and I always laugh that everyone just like drops their price. When no one's interested, it doesn't matter if you drop your price, right? You know,
Yeah,
it doesn't,
that's true.
If the property's $3 million, dropping it to 2.8 isn't going to help you.
Very true.
So there's that. Supply demand is a big issue. Ratio. We've talked about it. It's not like the ratio is 16 to 1 or 35 to 1. It's still 80 to 1 with gold rising. And we could talk about all the demand there in central banks. And then you have this critical mineral stuff. And then there's the geopolitics of the power center, the power projection of London, which is losing its power projection. And, you know, we kind of abstain from going too far down that road. But, you know, you can read between the lines on that
Come
one.
and visit. We'll get into that.
So new methodology, supply demand ratio, critical mineral. Yes, it's overbought, but it's undervalued.
Undervalued indeed. And that's why Morgan Stanley shakes up Wall Street with a 20% gold allocation. Yes, we've spoken with many, many clients over the last 2 weeks who are trying to make sense of what all this means in our prices. Gold crossing 4,000, all-time highs. Beware, pullbacks. Some are wondering whether they should buy or hold. Others are asking, what should we do? Well, we use the ratios. We use cycles. They go back hundreds of years. We use 50-year gold charts and understanding this history with money repeats. I know history, usually what they say is it rhymes. But when you're dealing with the same printing press and clipping the coins and diluting your currency, it's the same methodology since the Roman Empire. You're losing your purchasing power. That's why the alarm is on. When you have everything hitting all-time highs, money supply, M2 all-time highs, national debt, all-time highs, CPI inflation, a lie. There's nowhere else to go. Now you have Morgan Stanley shaking it up, upended traditional portfolio strategies. Chief Officer Mike Wilson's recommending 60-20-20, 60 equities, 20% gold. We're talking about 20% gold now. Imagine, we always used to say the extras pyramid. If 1% of that inverted pyramid jumped into the gold market, goodbye. That market is going to continue to rise, and you think you're seeing high prices right now in silver, you watch out. His rationale, Jeremy, gold is now a more reliable hedge than treasuries. He cites persistent inflation, volatile real rates, and rising concerns about fiscal sustainability. Gold, he says, is the anti-fragile asset in a fragile system, he told clients, noting the metal consistently outperforms during policy uncertainty and negative real yields. What is the central bank doing next week? They're going to be cutting interest rates. They're doing that in December. It's a war on your currency. The recommendation validates that what gold investors have long believed, what us at the Real Money Show for over the last 20 years have believed, with sovereign debt swelling and fiat credibility under pressure, hard assets are not an alternative. They are essential. Even mainstream Wall Street is rethinking what safe really means. That institutional shift towards metals comes at a critical moment for Federal Reserve policy. We've always said they've been trapped. They only have 1 to 2 tools: helicopter money from Ben Bernanke. Their policies continue to fail. They're always a step behind. They're going to be cutting interest rates over and over again. Silver and gold, they're inverted to that dollar, and they will continue to rise. So it's only jet fuel for us, Jeremy. And to answer some of the questions, we're happy that you already have if you have a good position in metals and an over allocation, we hope, then we're fine. We want you to hold something that's going to change your life. This is going to be life changing. Imagine multiplying your wealth. Some people are chasing 7% or 5% or even less. When inflation, real world, is 11%, you really need to fight back. You want a life-changing asset, and that life-changing asset is going to be silver. So either, if you have a good position, hold and watch. Watch that ratio. We'll, get the investor kit, get onto the newsletter. We'll tell you. We will report when those ratios tighten below 50, and we'll be in touch to discuss your strategy.
And remember, we're not financial advisors. This is, speak to those you trust. We believe in physical gold and silver, and we understand it's not a panacea. It is one part of a portfolio, as JP Morgan discusses, but we are proponents of this asset. It is not investing, it's ownership. And the number to own physical gold and silver is 18778-SILVER, and the website, guildhallwealth.com. If you're just tuning in to the show, we've been discussing that in London. They basically struck a circuit breaker. Silver stopped trading for 15 minutes. This is something we talked about with the ICE 9. What you had a name for it. Can't remember what it was. I'm sorry. But is it ICE 9? And, that's silver going unobtanium. We've been discussing that there's now backwardation in the market as well. This is something that usually happens when you're about to have a breakout in the market, not after you've had a 70% move in the market. And that's basically saying that the future prices are below the spot prices, which is to try to encourage the selling of the market. We also mentioned that the ETF to lease the ETF to be able to short the market, lease rates have jumped up to like 9% or something, a high number, which is making it very difficult to want to short the market. So a lot of things have been going on which feel like the wind at our backs, and we've hit over $50 in silver. And I have to admit, it is a bittersweet moment because it is a sustained price. Okay, we're back below it today. We'll see. I was saying to you in the break that it looks like they've tried to engineer a quote-unquote double top in the market.
We're in the North American market. Let's wait for 6 o'clock when China and the East open up. I think the real market's going to show up. We know that when this backwardation happens, we have a spot link products trading above the futures on two continents, China and India. So it's going to be fun watching this market in the overnight. I think 51 it will clear, and then we're off into a territory.
Yeah, as Michael Oliver has discussed, $50 anyway is kind of a phantom that you're chasing. It really has nothing to do with supply, demand, and ratios and overvalue, undervalue, etc.
Yeah.
It's just a psychological number, and to break through it means that the market as a whole, the individual investor, the institutional investors, they now have to start to think for themselves, what should the price be? And breaking 50 allows for that to happen. Though, look, it is a bittersweet moment. Clients have been waiting for the market to get to this level. It is a sustained level, by the way. Even if we broke above it, came below it again in one day, the market has been trading above $48 for several days now, if not a week. And that is as sustained as it's ever been. And all of the fundamentals are in play for higher numbers. So it's a bit bittersweet. It
is.
You're not going to be able to buy it at $30 again. The people who have waited for this, it's great that they've gotten this far. The market will be different moving forward. It is going to be an exciting chapter, but the previous chapter has ended. Maybe in some ways, even people have said, well, you might not like the world when if gold's trading at 10,000. And I have to admit, here in Canada, I'm not happy with the world that I'm seeing in Canada. Although I did enjoy the trolling the other day. that was going on in the Oval Office, and those who know, you know. But hoping for better days. And I've also said this in the past, Jerry, that there's such an opportunity, and as you said, it is a life-changing opportunity. These opportunities do come by once in a generation, and if you feel like you missed something with Bitcoin, think about silver, because it's only trading at 50 and just under $50 an ounce, and start to look at what the value of that is. Not, well, we think it's going to $3,000, not we think it's going to 300, but you can sit down and figure out where you think it could actually go to, given the supply-demand fundamentals, ratios, you name it. This, again, the new methodologies that are being used, the changing world. Central banks looking for gold. It's now not just about hedging against inflation, but it is also about bringing trust back into the system and trying to create a global trade structure that's going to be fair. And every central bank seems to be buying it. And as we've been following on this show for years now, that it's a way to revalue your assets against the debts and grow the equity side of the balance sheet as much.
That's what we're seeing. It's definitely a revaluation. Just as Vince Lancy argued that if you valued gold against the U.S. M2 money supply, just like it was in 1980, you don't stop at $6,600, as Jefferies, a major U.S. investment bank, stated earlier in a missive in September. Lancy argues you will land closer to $12,000 per ounce. His math is simple. In 1980, gold peaked at $850 when the M2 was a 1.6 trillion. Measly 1.6 trillion. Today's M2 is over 21 trillion plus. Adjust that ratio and gold should be 5 figures. He calls this the remonetization phase. When your gold regains its role as a reserve currency, when it's your reserve, it's that asset it's a real asset on your balance sheet that you can breathe again. You can find liquidity. And what we're seeing right now in this backwardation, this is definitely what macro liquidity mentions. It's basically dealers right now are being forced to dump paper positions to beat margin calls. Futures are falling faster than spot, so that gap keeps widening even as both drop. Credit is pulling back. No one's stepping into arbitrage. This is a funding squeeze, liquidity. This is what usually causes markets to really collapse. And when the market collapses, you're going to see a little temporary volatility. You better have that metal, because when you have that metal, you have a life raft. You have an asset that is decoupled from a financial system that is on the brink. You have something that is liquid, that can be converted into any major currency that comes around, but it will be the solution, because the U.S. will step in, pass a few bills, the Gold Standard Restoration Act. Things are going to be moving in the right direction. And gold and silver as well. Silver has that potential to become remonetized again. We had a gold silver standard in the 60s and 70s. So we're very optimistic. And because silver and gold, as we see, is the trend around the world being set up in vault systems, the U.S. right now, it looks like they're on the outside looking in. But when we're seeing Tether backing itself up, being blockchained gold, the Treasury can grab that and use that for the backing up the financial system in the U.S.
I realize we have to update our X, because from 2 weeks ago it says the title of our show was $50 silver up next. So we're as guilty as the banks, buddy. We've got to get onto it. But Peter Spina from GoldSeek, he said that HSBC raised its 2025 average to $38.56.
That was the forecast.
Yeah, so things are a
little behind.
Yeah,
that's backwardation.
Yeah, I'm just going through a couple of our things before we go to break here. Geiger Capital, gold is now outperforming the NASDAQ over the last 5 years. All right. Read that again. Okay, let's
do it.
Gold's outperforming the NASDAQ. I've been also posting Mark Cuban trolls, because Rick Rule did one, because do you remember he was on what's his name, Bill Maher? They did the interview and he was just Mark Cuban was chastising him for wanting to own gold.
Yeah, I remember that.
It's like, okay, maybe you're rich enough.
Such
You
a
don't
good
need
one.
you don't need it. You can afford to just lose money to inflation.
You don't need to protect your wealth.
Good for you. So Rick Rule rhetoric. It's not his. It's a different channel, but it says Mark Cuban's quote in 2022 at $1,800 an ounce gold. If you have gold, you're dumb as. I'll let you fill in the blank. The number 18778 silver. The website guildhallwealth.com. No, you were not dumb to own gold. It was probably the smartest thing you could have done because it's over doubled since then. And, Jerry, we're seeing supply shortages. I've been noticing it's sort of this spiraling towards North America. You saw Asia starting to get tight. We mentioned last week Australia did an op-ed on the mainstream news, and their markets got the retail started to get wiped out.
Vietnam.
You're starting to hear it here as well, but it's definitely not. It doesn't feel like silver squeeze in 2021. It doesn't feel like that first initial when the pandemic started. We've seen some pretty crazy stuff happen in the retail, but I think ultimately the reason why it's important to have the physical product is if you've never purchased precious metals before, there is an aha moment that happens when you buy physical silver or physical gold and hold it in your hand and realize that it's not an investment, it is ownership. And with everything that's happening in these markets, it's a good thing to protect not only your wealth, protect your investments. If you've been in the stock market and you're enjoying those gains, why not hedge a little bit? Why not put a little bit onto real money? Why not take a little bit of profit off the table and hold some physical assets? Do you want to wait until there's a major pullback, or do you want to wait until the money continues to decline? And, look, declining money and inflation is not to say that things can't get rolling. It's not to say that AI won't boom and that there'll be new technologies and that the economies can boom. Of course, we believe that, but I think there's also going to be a lower dollar.
Yeah.
And this is an opportunity to protect against that. And if the market does grow, industrially speaking, whether it's new technologies, AI, green technologies, then why wouldn't you want a piece of the critical metal, right? So the number, 18778 silver, the website, guildhallwealth.com. Some final moments, Jerry.
You know what? When we look at the strategy that we have to employ, it's a time-tested strategy. We've been doing this for a very long time, over 20 years, and we've, as we approach this Thanksgiving weekend, just want to, extend a heartfelt thank you and gratitude for all the Canadians, even international clients that we've helped over the years. That you've given us the ability and the honor to help you guys. I want to thank you all for entrusting us. And we are going to be here. We're going to be here for the long haul. We're not going anywhere. We are just as invested as you are. Our metals are in the same vault facility as yours. So we poke holes in everything. We try to poke holes in everything. And if there was a sliver of any risk in this market, we would let you know what it was. If we didn't trust the vault, we would let you know. My money would not be in there. My wife's money would not be in there. My parents. We trust it. And we hope that we hear from more of your friends and colleagues. Send us referrals. We'll definitely help you out in metal. We pay great affiliates some fees for referrals. So keep that in mind. But this is definitely a strategy that you want to employ as well for yourself and for your families, because gold right now is a barometer. It's a barometer of a lot of bubbles and overvaluation. And as permanent portfolio investment strategist Harry Brown said, when paper money systems begin to crack at the seams, the run to gold is going to be explosive. Gold is over 4,000. This is a big move, and silver above 50. This is a big sign. You're not late to the game. This is just the beginning.
That it's making me realize as well that I think what we're witnessing is that the end of the psychological operation against gold and silver that's been in operation since 1971 after they lifted the gold standard.
100%.
Because after you lift the gold standard, you need to make sure that that nobody wants to own a pet rock. And the only thing that's going to get someone to own a pet rock is if they see the prices going gangbusters.
It's more than a tradition.
But if you can tamp down the price, make it volatile, etc., and have all this additional narratives and rhetoric against it, then you're going to build a pretty good case for people to not want to. And I think the fact that we've had a sustained move just to this point and say, well, it's still undervalued, the ratio is still high, look at the demand structure that's going on. Oh, now banks are looking to change their methodology in the market. Oh, it's a critical mineral, by the way. Oh, there's no supply. You're looking at a change of the guard, a changing of the guard in these markets and what it means to have something like an asset as opposed to owning nothing and being happy, right? So, Jerry, raise a glass. Here's to asset ownership.
Yes.
And and building wealth for generations to come.
Blessings. Future for Canada, we've got to follow the money. And I think the U.S. bill that's calling this integration at the northern border, which means the U.S. law enforcement can now look at the follow the money and the NGO money that is poured in and through and out of Canada. Canada, we're going to see a turning, but I think it's going to be a turning for the best. We just have to follow the money. Truth, you cannot hold back the truth. And gold and silver are your honest money. Have a great Thanksgiving, everyone. Enjoy your time with your friends and your family. Go Jays, go. The Yankees lose. And we're moving on.
Yeah, Jerry, thank you so much. I want to thank all our listeners and all our clients. We really do appreciate you. We appreciate that you've helped keep us here and that we look forward to the future. So it's a great weekend to be thankful, and we are. This has been The Real Money Show. If you want to get more involved in the precious metals or even for the first time, the number 18778-SILVER, the website guildhallwealth.com, and we'll speak to you all next week here on The Real Money Show on 640 Toronto.